This deal gives you roughly $700 million in proceeds. What are you going to use them for, and where does it take the company to?
Yeah, thank you so much, Ed, for having us. So Nextdoor is already 1 in 3 households in the United States, 276,000 neighborhoods across 11 countries, but we are primed and ready for growth. So what these proceeds do are, number one, they let us continue to grow new neighbors onto the platform. We're a network effect business. More neighbors means more content. It allows us to keep adding personalization. So when you come as a neighbor, it feels like home. It's a place where you want to meet the people around you. And then we want to keep investing for businesses, both the small local businesses who thrive in local communities, but also our proprietary ad tech stack. Beyond that, of course, it's about going global as well. We know Nextdoor works in every country around the world, and we just need to get it there.
How does going global look for a company like Nextdoor? Because presumably there are going to be certain markets you're targeting first, and I wonder how that splits between developed and developing world markets.
Yeah, it's a great question. If you look at today, in 2021, we've leaned into outside of the US, the UK, Canada, Australia, and the Netherlands as countries we saw as very strategic. I think in 2022, we'll come back to that rest of Europe that we're already launched in, but want to go bigger in: France, Italy, Spain, the Nordics, and so on. But Nextdoor is definitely a platform that we think can work in either a young developing country or in a more mature European country. And it's really about just getting it going, getting it started, because we know that people want to connect locally, and we know that things like local businesses and so on want to be part of a local platform.
And Vinod, you've talked about the appeal of working with Sarah again, and obviously you guys have a pre-existing relationship going back to Square. And indeed, Square grew phenomenally. I think you talked about it this morning being a $2 billion market cap company that went to 100. This deal values Nextdoor roughly 4 and change. How do you see this growing? I mean, could this be another $100 billion company or potentially even bigger?
Without picking numbers, Nextdoor is the neighborhood social network, just like LinkedIn is a network for professionals. And it really has strong network effects and an unusual feature, which is online and offline effects, which you seldom see in online networks. So in terms of potential, we see a lot of potential. In fact, most of the growth is ahead of us. There's huge growth vector in, of course, the local digital advertising, international growth, but there's also non-advertising sources of revenue that are possible in the future that excite us. So how big can it be? It depends on how well the team executes, but it's not limited by the opportunity. And we think we have a great team here.
And Sarah, Vinod makes a really good point there about the sort of existing opportunities at a company like Nextdoor, but indeed its track record for delivering over a long period of time. Let me ask, why go down the SPAC route for this public market debut? Why not go down a traditional IPO or indeed a direct listing when this is, as I say, an already established business?
Yeah, we really had the choice, frankly. And what we liked about the SPAC route were 3 things. The first was we could spend a little bit more of an elongated period of time with investors, from picking the SPAC partner, and we wanted to pick a partner that brought more than just capital to the table. But then beginning with the PIPE process that we've just completed, and then through the de-SPAC process, right, we spend a lot of time with investors. And you can see the outcome in just some of the blue chips that we've added even during the PIPE, right? Tiro, Dragoneer, Soroban, existing investors like Tiger, head of Sophia. The second reason was really deal certainty. So when we looked at the timeline, we will de-SPAC around the same time that we felt we could have fully gotten there with an S1. But now we know upfront the valuation, we know approximately the proceeds. It's actually bigger than what we could have raised likely in an IPO scenario. So that allows us to really start planning and even executing against that, because we have money on our balance sheet today that we can use with some of that certainty of what's coming in the fall. And then third and finally was this ability to find a partner that brought more than just capital, right? 7 years of working with Vinod, I really came to appreciate, first of all, his ability to really long-term think, his ability to really push us to get outside a comfort zone. So he talked about revenue streams that aren't just ad-based, right? He is going to push us on that, and we're going to be the better for it. He's also a great recruiter in the Valley and beyond. And so there are many reasons why we really, in particular, did it with Khosla, not just with any SPAC out there.
And Sarah, a big part of the ethos of this company, and you've talked a lot about it, is kindness and this aim to be the sort of kind networking platform. Indeed, I think this company is going to trade under kind post-completion of this deal. I wonder how you manage that when you have this trend where social networking, social media have become, as it were, the repository of choice for a lot of venom, a lot of rabble-rousing. How do you maintain that message on your platform without editorializing and potentially censoring your users?
Yeah, I mean, this is at the core of who we are, right? Nextdoor was founded on trust. You had to be confirmed as a real neighbor at a real address. There's no avatars or bots. And so we think part of it is social science, right? Behavioral science. When people are their real selves and you might actually bump into them in the line at the local coffee shop, you inherently act better. That said, we don't want it to be all kind of saccharine and sweet, right? Kind can sometimes get you into that zone. We want kind to read as bold, to bring tough conversations to the fore and have people disagree, but not be disagreeable. And that comes back to we can use technology again in tandem with behavioral science. So we do things like kindness reminder, right? If we see you posting something with some of that venom that you just talked about, we actually slow you down and remind you that what you're about to post is likely to be reported, for example. That actually tends to make people be their better selves. And they also think from here, not from here where their biases reside. So we've done a lot of work to wrap technology into this. So it's not about moderation and editorializing. Rather, it's about how do we utilize technology to help people engage, but in much more constructive ways. Even though sometimes it means that it tips down engagement, we don't want to just fuel the engagement fire for growth at any cost. We believe great growth comes because you build a platform that people feel welcomed onto.
Vinod, Sarah, before I let you go, Vinod, quick question for you. The SPAC boom obviously is something we're seeing slow down. We've seen that reflected in the way a lot of these vehicles are now trading. Do you think this particular market bubble has run its course?
Well, there were good things about SPACs and bad things about SPACs. Biotech has always been able to do IPOs without having revenue for 5-10 years. The ability to explain your future when it's different than your past, which we see in the case of Nextdoor, accelerating growth, is a real benefit to companies when they're considering an IPO versus a SPAC alternative, in my view. And if we can eliminate the abuses in the SPAC market, for example, no warrants, longer lockups, more regulation. So investors, companies are held to the same standard as if they were doing an IPO. I think it's a very good, important tool, but the slowdown is healthy and will result in better SPACs and better SPAC behavior.